Hello everyone. If required, please pause and have a look. This is the last night S&P 500 price action. At 2 p.m. Eastern Time, Fed announced that they were cutting the interest rate by 25 basis points, which was widely expected. And in addition, they also released the future economic projections, which is really very good. So the moment they released, S&P 500 increased around 0.5%, but it was hesitant to move up as at that time, Fed Chairman press conference was scheduled at 2:30 p.m. We discussed this yesterday. Market and analysts were expecting Fed Chairman to do the hawkish cut, but surprisingly, he spoke very positively. I won't say it's dovish, rather it was positive. Hence, during the press conference and after that, S&P 500 further added another 0.5%. So, in this video, let's discuss in detail like what that FOMC economic projection report and what Fed Chairman spoke in his press conference, along with our regular pre-market report video for today, 11th December 2025 for the Indian stock market in terms of Nifty and Bank Nifty. If anyone fancy reading the FOMC economic projection report and viewing the Fed Chairman's press conference, please have a go. I will attach the link in the pinned comment. Anyway, let's start. First, GDP future projection. I took the snip from the FOMC report. This is that one macro that is very positive, and even all the press people asked questions about it with the Fed Chairman. The bottom row is the September month projection and the top row is the last night December month projection. As we see here, first for the 2025 calendar year, earlier they projected the US GDP to grow 1.6%. Now they upgraded it to 1.7%, which is good. And in fact, Fed Chairman said this in the press conference. If not the government shutdown, they expected the GDP to be 1.9%, which is really very good. And more positive and very important, please look at the 2026 calendar year US GDP growth projection. In September month, they projected only around 1.8%. Now they increased that by 0.5% to massive 2.3%. Which is really a crazy upgrade. Even for 2027 and 2028 calendar years, they increased it compared to September month, but it was only 0.1% higher. Whereas for the next calendar year 2026, they increased it to 2.3% growth rate. This is what market took as very positive. And regarding this upgrade, various analysts asked about this upgrade, like why they upgraded this kind of. For that, Fed Chairman mentioned productivity of the companies really increased now. Then the consumer spending is good and stable. In addition, this data center related investment. These all three are expecting to drive the US economic growth, which is a very convincing answer and positive from the stock market perspective. Then the second projection, unemployment. If required, please pause and have a look. It's same as September projection, no change at all. Already US got the historic low unemployment rate, so it's a neutral data. Then moving to PC inflation, in the September month for 2025 calendar year, Fed projected the overall PC inflation to come around 3% and core PC inflation to come as 3.1%. Last night they reduced both by 0.1%. For this calendar year, Fed expecting the headline PC inflation as 2.9% and the core PC inflation as 3%, which is mild positive. Again, the major one is in the 2026 calendar year projection. The headline PC inflation to come as 2.4% against the previous projection 2.6%, and the core PC inflation expects to come as 2.5% against the previous 2.6% projection, which is very good from both market and economy perspective. Then for 2027 and 2028 calendar years, they maintained the same status as previous. So this inflation projection also very positive. And the final important one, what is the interest rate projection? If required, please pause and have a look. The median value, please note the median value didn't change. It's same as previous September month projection. However, if you see the range, particularly for 2026, the September month projection, it was 2.6 to 3.9%. Now that range band widened to 2.1 to 3.9%. Because just the lower band widening, it is very much positive from market perspective. So out of 4 macro projections, 1 neutral and 3 are very good and market friendly ones, and that's the reason the moment when those projections released last night, immediately S&P 500 increased 0.5%. Then about the press conference, I could condense all into 3 important things as a takeaway. Just a bit of background. Because of pandemic, in order to support the US government, during 2020 to 2022 mid, Fed purchased the government treasury bills. For example, before 2020, on an average, they held roughly around 4 trillion US dollar worth of government treasury bonds. During those 2.5 years, it increased all the way to 9 trillion US dollars. Then, because inflation peaked in the mid of 2022, so after July 2022, they started to sell these treasury bills until last month to control the inflation. In a way, it's a clever way of controlling the inflation by taking the money out from being in circulation. Hence, at present, US Fed got roughly around 6.5 trillion US dollar worth of US government treasury bills. And in the October month FOMC meeting itself, Fed chairman said that they are going to reduce the pace at which they were selling, and that itself market took that as very positive. Now, last night, Fed chairman said he's going to stop selling and going to purchase every month around 40 billion US dollar worth of treasury bills. Meaning he's going to add more money in the circulation, so it's like equivalent of another 25 basis point rate cut, and for sure very positive from the market perspective. Then second, he and the other FOMC members believes at present the inflation is stable around 3% just because of tariff influence, which they expect it as one-time influence and to peak in the first quarter of 2026. After that, they believe inflation will start to drop kind of. Then the final one, which was a bit of negative, at present non-farm payroll addition data indicating 40,000 new job addition every month, which they believe is an error. And they believe and projecting it might be decline of 20,000 jobs rather than the addition. And that's one of the main reasons why they are cutting the interest rate now rather than doing it in the January month, which is a very bold negative statement against the US government. However, overall press conference was market friendly and hence all 3 major indices closed positive. Dow Jones increased 1.05%, S&P 500 was up by 0.68% and Nasdaq increased only by 0.33%. That's because of Netflix and Nvidia issues. In case of VIX, it dropped from 17 to below 16. In line with the US market, last night GIFT Nifty increased closer to 26,000 mark, but early morning today it trimmed some of its gain and traded around 25,966. Equating that with the spot market, for now it's indicating the gap up opening of over 100 points. Then regarding Indian ADR, as it is, IT stocks closed significantly positive, whereas banking stocks closed flat to marginally negative. If we calculate the arbitrage, Infosys showing massive positive 2.5% difference, Wipro showing positive 2% difference, HDFC Bank showing positive 1% difference, ICICI Bank and Reliance GDR showing no fresh movement to positive 0.5% difference. So as a summary, US market closed positive because of positive Fed chairman message, and in line with that, Indian ADR and GIFT Nifty indicating the gap up opening. However, nobody knows how our option market behaves, and in addition, at present for the second day, India and US are having the trade deal negotiations, so we could expect that related influence as well. Then about institutions, in the cash market, FI was net sellers, they net sold for 1,650 crore rupees and DI net bought for 3,750 crore rupees. Then moving to participant-wise open interest analysis, yesterday index future open interest increased 3.2%, whereas on the index option, 34% new call option open interest and 14.2% new put option open interest were added. Because of more call option open interest addition, the PCR ratio decreased to 0.74 from 0.87. Then stance-wise in the index options, client holding net 20% open interest favoring bullish position, which is very high, whereas FII and property traders having net 8.7% and 10.8% respectively of their open interest favoring bearish position. However, in the index future, proprietary traders joined with client, so they are both having 59% and 68% respectively of their open interest on the long side. Whereas on the other hand, FI is holding massive 89% of their open interest on the short side. About the things to look out today, during our market time, there is nothing that I'm aware of that is scheduled to release that could influence our market. However, in the night, US weekly jobs data, 30-year bond auction and Fed balance sheet are the important things to look out. Finally, I think tech technical is not relevant today. So that's all in this video. Hope you got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.